What up? What up? We back going over these Australian dollar charts on Sunday. We're gonna review what happened last week and talk about the future. The future week coming up ahead. But before I do, let me close this Pro Tools out here. Mm-mm-mm. Probably go. All right here. Let's look at these charts, man. See what we got going on. Locked in, locked in. Okay. Yeah. All right. First of all, we're gonna put up a vertical line to notate the previous week and when that started, so we can know what area we're looking from. Monday, Sunday, Friday, 15th, right there. Sunday was this. So that engulfing was Sunday. Bam. That's how we're gonna do that. So basically, everything past this line and up to this point, which is right here, that's what happened from last week. And that's what we're about to talk about. So let me clone this. You hear me? Let me get a clone of that. Can I get a clone? Oh, you just gonna do it like that, huh? Gotcha. Then we're gonna go on to Friday, Sunday. Bam, Friday, Sunday. All right, bam. So everything in between the blue lines, that was last week. So let's talk about it in detail on what happened and what did we take. Everybody know, if you don't know, basically the trading strategy that we follow is the engulfing, and not only in engulfing, but a color change engulfing. Meaning we want two or more of the same color candles, whether it's red for bearish or green for bullish. And we want two or more of the same color candles, two or more. So it could be 2 or 6 or 10, followed by an engulfing color change candle. So an example, two examples right here, because I created an indicator that basically points out when we get an engulfing. But here we have 1, 2, 3, 4 of the same color green bullish candles, followed by an engulfing color change, meaning an opposite color, meaning red, meaning bearish. Green is bullish, meaning going up. Red is bearish, going down. And we engulf this candle. And what an engulfing candle is, basically, is when you get the body of a candle to completely cover the previous body, the previous candle's body. So we're not worried about the wicks or nothing. We're looking at the bodies of the candle. And this body is larger than this one. We move a little bit forward, we have another one. We have 1, 2, 3 of the same color candles in a row. It can't be one green, one red, one green, got to be the same color, followed by an engulfing. And not only was this a powerful engulfing, because it engulfed this one, but it engulfed this candle, this candle, this candle, this candle, and I think this candle. So that was 5 candles that engulfed. So that was real powerful. So let's see how it would have played out if we were to get in any of these trades. Number one, Sunday off the rip, you had an engulfing, but these are okay. You just gotta be cautious because it's engulfing Friday's close. You know, Friday's price action last week. So this old information, you know, it's continuous, meaning that we're continuing, you know, through the next week from Friday to Sunday, skipping Saturday, but still it's old news. So I would like to see fresh price action into the new week and then find a setup there. And hence the fact that this trade, you would have entered here, your targets would have been short as hell. This is pretty much where you're targeting at, or the low. Obviously, it did go there. But if you was expecting it to continue bearish, then you would have held on. Your stops would have been roughly about 5 to 10 pips above here. Initially, let me see, on this rejection, what was this 10, 20 is up here? Yeah, after price was pushing up around, what was it, 10 o'clock, 11 o'clock, going into London overnight, possibly would have got out of this trade or at a loss or break even, depending on how you look at it. But nonetheless, the entry would have been at 67.05. 10 pips to the downside was 66.95, which would have been right here. And you would have got that taken out twice, either here or this hour, if you would have held. Also, if you would have held the stop loss in 10 pips above the high, you possibly would have been saved from being stopped out, and then you would have caught a second sell-off potential later on in that during London. As you can see, if you didn't catch the one, you got stopped out or you missed it. There was another one during London, but like I said, you would have had to been up to catch that. A lot of people that live in the U.S. probably wasn't up to catch that one, so that just would have been a loss on that one. And then you would have had to wait all morning. There was no engulfings, a lot of price action though. So this is typically in the, you know, we like to see where we can get in if we don't have an engulfing, if the price action showed us. But overall, this was consolidating, so we didn't really do nothing that morning until later on in the evening around 8 o'clock. Yeah, there was a bullish engulfing followed by these 2 bearish candles. Then we get a color change, but also an engulfing color change. The body is larger than this body. And we were entered on the close of the engulfing, which is right here, 66.93, 293. And that one, you wouldn't be getting out of this trade until you see an opposing signal, meaning a bearish engulfing candle, to let you know that this has pretty much lost its steam. And holding until then, let me see, what was that? Oh, that was 67 flat. I'm tripping. 67 flat on that close, and you would have taken it out around 67.38. Let's say almost 40, close to 40 pips. Around a good 30-40 pips you'd have got. Let's see if we got still in this thing, man.
Correct.
My brother.
Yes. What's up, brother?
Man, you already know. Chopping it up. Chopping. Man, what the hell? What's up, Amanda?
Raise the roof.
Raise the roof. Looking at her.
I'm sorry, guys.
Apologize for that, guys. That was not a forex trader. That was a sweet Amanda. hopping on. But yeah, just continuation from last week. We caught buys here at 8 o'clock, and like I said, if you wasn't up in the morning to catch London sale, not only did we didn't get an engulfing during this morning, but as you can see, price came back into the area where you would have caught an entry on this London sale. So you could have caught entries on this sale and been quick, but that's some scalping stuff, and we really not on scalping. Something I do want to start to look at, because I still I'm not pulled to it, but I do like the daily opportunities that certain pairs give you. Not so much the Australian dollar, but pairs like indices and gold and all that stuff. But that's a future date. But wholeheartedly, to the end of time, Australian dollar is the pair all day. Like, you make enough money on here alone. No need to look at anything else. But that's just on a personal note. Nonetheless, coming up to the other signal you get at 8 o'clock in the morning, and that would have taken out of your buys. Hop in your trade here. 10 pips above the high is the stop for this. So we at 45, 55. Actually, no, it's 10 pips above the open of the engulfing candle. So that's 41.51 right there. So nonetheless, the trade did not get hit. Targets was here or up in this area. Both situations got hit for targets. That trade also was a 38 going down to a 08. 08 was up here, so that's 30, 98. That was a 40 pip move right there. So you got 30 up here, 40 right there. That's 70 for the week so far. Looking good. Keep going. This one was a Tuesday morning, so you would have been kind of waiting, and then Tuesday night going into London, Wednesday morning, that's when you would have got stopped out in profit. Nothing reversing for Wednesday morning. No engulfings. We did get a reversal, but no engulfings. Then we get another engulfing here. Take that sell. You probably your stops could have either been above 10 pips above the open of the engulfing, or five pips above the high wick of the engulfing. This one, if you're gonna put your stops above here, I would just keep it as tight as possible, because if it's gonna go up here and take you out, you should be out. You don't want to be 10 pips above here. A lot of this kind of like a common sense too. Everything don't have to be so static, but you do have to have common sense on where you place your stops and your take profit. So again, this was an engulfing followed by several bullish candles. You get a color change engulfing, enter in on the close. We get some retracement up in here, a little drawdown, and soon after we go into profit, and your targets would have been right up in this little area, and you had at least about 4 or 5 hours of areas to get out, times to get out before the market start to rip up. Not only that, you get an engulfing, which is another reason, with the ultimate reason to get out. If you didn't, if your targets didn't get hit per se, being that you got this engulfing, you would have got out. So entries right here at 67.16. So even if you would have got your targets like right here, or maybe just smooth 6706, that would have been a 10 pip, nice little play. So that was 10. Then later on that evening on Wednesday, 9 o'clock, we get another engulfing, stops below the low, about 5 pips below the low, to give it some breathing room. That never got hit. Your targets, if you would have had a close target, you would have got taken out rather fast while you were sleeping overnight. Granted, if you had targets up here where the true high was, You could have exposed yourself to more profits on that move, but nonetheless, let's see how it worked out. So you got here 6706. Your targets would have been at another 10, probably 6716. That would have been an easy target. So bam, that would have been another 10. If you didn't have your targets and you was targeting more above this high, the fact that you you didn't take out this low with all this support forming right here. If we would have taken out this low, then that would have kind of gave us more confirmation that we wasn't potentially going up here. Maybe we were heading, we were continuing down, bearish down for more to take out more low level liquidity. Other than that, we never took out this low. Everything held as strong as support. So I mean the bullish pushed it higher. Not only that, we were followed by another bullish engulfing at right after midnight, then followed by another one around 5, 6 o'clock in the morning. So with all that confirmation, like I said, if you didn't get stopped out overnight in profit, you would have woke up to a great trade. And this actually, that 6 o'clock candle probably would have taken you out, because if you didn't have a profit set here, a nice little profit area would have been right up in here. So if you didn't get taken out, this is a good area to just go and close the trade. Like say if you had your stop, your take profit right here, and that's at 67.38, but you see price close at 67.35. Go and take that. You know, you already entered in down here at 67.06. Go all the way up here, 67.36. That's 30 pips all day. Go and take that. So nonetheless, off of that 70 plus 10 plus 10, you had 90 or 100 pips right there. Let's see, we have somebody join in. Some cut back. Damn, we got a subscriber, man. Hell yeah. Shout out
to Panda. Shout out to Panda.
Ray, man. Shout out to Oanda. We got a new subscriber, you heard me?
I love it.
Yeah, we got all the notifications, you heard me? But yeah, that was what happened. So you would have basically been at 100 pips around that time, or at 90 at the least a little bit. Then over here, we go into the morning. I mean, if you're a person that's looking at liquidity and looking at filling of gaps, this would have been a good entry. I mean, it was so close to being engulfing, and that would have been a sweet, buttery biscuit move, but it just didn't give us that. And I think it was being a little hope, but that's all right, because we were just gonna let that ride. And then going into the evening, we had a lot, some volume pushing the market. We started to get consolidating like we always do around the Asian session, and then later on into the evening, 8, 9 o'clock, we get more selling. Now, from standing back looking at it, yeah, you probably not. You would have felt some kind of way. I ain't gonna cap. You would have felt some kind of way, missing out if you didn't capture none of this move. But hey,
I know I did.
You know, it's all good. You missed the move, like in the same way for this move. Like I caught it, but there was no sell engulfings on this move. But that was a nice move to capture. So that's goes back to what I was saying about scalping, not really scalping for getting in and out, but if you see a lot of weird movements, like this wick up was a weird movement. This push up over these relative equal highs up here, also filling this gap, this clean traffic, that would have been like a telltale sign, especially when it's reversing back, not giving us a full engulfing, but damn near close. You could have just rolled the dice on those with a tight stop. I'm talking, and when I mean tight stop, this is how you do a tight stop, because you don't want to be too tight. So it's like, say for instance, you would have been like, man, that's kind of close enough to engulfing. And I'm thinking it's going to continue to sell off, especially after we took all of this liquidity and filled up this clean traffic. I'm going to take a chance on that, just to say you're going to take a chance. Trade light on it. Don't go heavy. But if you do get into a sale on this, put your stop right above 50% of the range. So basically, you want to take your Fibonacci. You don't really got to use Fibonacci. You could really just look at, I just look at the damn number. And I just look at the damn number on the cool. So our 50% is right here. This year orange line. I think that's 50. No, that's not 50. This green line is 50. Yeah, that's the 50% level. So basically, if you got into a sale right there, put your stop right there. If it goes up, cool. You wasn't supposed to be. That's not your setup. That's not engulfing you. Good. You was just at the casino. You was rolling the dice, and hey, you got in. Simple as that. That's how you would put a tight enough stop to where you won't lose all your money. Granted, you shouldn't be trading heavy on this because it's not your setup. You just rolling the dice because you feel you got a hitch, that a hunch, or whatever the fuck that word is, that you feel like price just went up here to run stops and we go turn around. Now, granted, we wasn't thinking that way, and I'm gonna show you why. Let me take this off. We was not thinking that way because if we look at the daily on that up move, the daily engulfed right here. It did it twice. Actually, the daily engulfed on Tuesday, going into Wednesday. So to follow this Thursday, that was just more proof that we felt like it was going up. But as you can see, as market opened on that Friday candle, we sold off. And if we go back to the 1 hour, you can see that right here. The new Friday candle opened right here at 1700, and we sold off. So you could have just drew a box right here, knowing that this is a new daily forming. If we break to the upside, then you know we about to continue on this bullish continuation, following two bullish engulfings that we're seeing on a daily. The fact that that didn't happen, and not only did it not happen, the opposite breakout of this consolidation was a powerful sale. So that alone just gives you, the tell. And then back to my 50%. If you want to just off the fact that it broke out, you just want to catch that sale and target the lows down here, hey, get in here, put your stops at 50%. Don't put it up here at the top, because you shouldn't even let it go that high, because it's not your setup. You feel me? So this is a risky trade at the end of the day. So put your stops right above 50% and let that whole run if you're trying to get into some higher risk setups that's not your engulfing setup strategy. Nonetheless, if you didn't catch none of that, you missed it. Boo-hoo. Over here, we get into the morning. We do have an engulfing here, but we're not up to catch that. We're not up until around this time. So if you did want to catch that engulfing and say maybe off this wick down, you might be like, hey, I still feel bullish. Let me catch that engulfing. You're gonna put your stops. I would say I would put 5 pips below this wick. So that's 83. We're gonna go 78 down here. So as it stands, you didn't get stopped out. You was close to it right here, but didn't get stopped out. Your targets would be up here, which we are nowhere near that. So this trade probably either would have got stopped out at break even. If you would have moved it up, let's see, we would have got in at 66.88, and we would have moved up to 66.98 with 10 pips. You could have put it at break even after you got close to that 10 pips. If you would have got stopped at a break even, cool. If not, the fact that you were consolidating all the way until the close, which is right here on Friday, that alone would have just let me got out. I would have got out of the small loss or a small profit and I've been happy. It's Friday. If you don't get nothing happening by 9 NYC open on Friday, which you probably shouldn't expect nothing, even though we did get a nice rejection on NYC open right here at 9, but you shouldn't expect nothing because it's Friday. And with that being said, you can see what played out. Nothing really. It was consolidation. and now we have a consolidation block we are in, and we just waiting for price to break out. Simple as that.
Sophia will talk to you, but I want.
So y'all already know how we do. I want to look at the higher time frame to see what the weekly gonna do. Or what we gonna do for the forthcoming week. Let's see. Let's go to the weekly. Cause what are we at? We are ending April, so this is gonna be the last week of April. Okay, let's go to the monthly. Let's see how we're gonna close. Let's take this off. Take that off. All right. We do know we have levels of interest down here. I think that was on the weekly or daily down here too that we didn't hit yet. So one could look at that as targets, especially I feel like those potentially can get hit. And the reason why, looking at this now, going off that daily engulfing we saw, it didn't work out to the best because it's fighting off of this monthly engulfing. And I want to say we got weekly engulfings too, but overall, we got this monthly engulfing and we are targeting the lows. This engulfing was at least targeting this support, this strong support right here. We got wick rejection, and we got strong support right here. So at least it was ultimately targeting this, but this was a nice little area too, right up in here to catch a buy up in this little zone. So small, but still a zone. Let's go to the weekly. We still, overall, the monthly is showing us a bearish continuation targeting these lows. So let's go to the weekly, see if we see the same thing. Let's see, overall, coming from April, let's look at it a little bit. Coming from February, we've been bearish. Lower low, lower high, lower low, lower high, lower low, lower high, and so forth and so forth. Then we come here. We I wouldn't say that's a breaker structure. That's just a equal high, double top, if you will. And then we turning around and continuing on this bearish trend, following and engulfing weekly. It's not a color change, but it's still engulfing off of this double top, equal highs. So extreme targets up here to take out this liquidity we got up here. But following this engulfing and then following another engulfing down here that gave us the new low of the year. We are consolidating right now, and we are expecting a bearish breakout to continue down, targeting these lows in this area here. And I'm only saying we are expecting bearishness because we're coming off of this bearish engulfing, off of this nice, strong resistance area, creating a double top. Until we see otherwise, I will, feel more bullish. I mean, then not only that, we got a lot of wick rejections right here. We had one small one, but we got two larger wick rejections that pushed us way under this consolidation. It wasn't above, like nothing closed above. Everything kind of closed right up in here. So the bears are definitely rejecting all bullish movement. So that's one thing we can know. Bears are still in play. Let's see what the daily looking like. And I don't want to go too back in history. I just want to go what was recent. So we coming off of this daily structure change after this bullish momentum we were getting from, I want to say, what's that, March? No, tripping. This is okay. No, this is still the beginning of the year. So That was in January, low of the year. Then we pushed up high in February. So we still consolidating overall. Like, I can't really call this now. I mean, back then in the previous week, yeah, this was a fake out coming down, but now it's I see what it was doing. It was just creating confirming this strong resistance in the form of a double top, and now we pushing back down into the same consolidation block that we had before we noticed this push out and the move back in. We trading back into that consolidation again. So with that being said, let's look at those daily engulfings we were looking at. So we had this engulfing after a color change, after a nice strong rejection. This engulfing would have been beautiful if we would have not only taken out highs but closed above it with a body. That never happened. We rejected this area, didn't get a close below, so that kind of still was showing proof. Okay, the bulls are still in action, because I think I caught this buy down here, this wick rejection. So the bulls are still in action. You know, the bear's not engulfing. Then the bulls go push higher for more, I think, to entice people more in the buys. But it closed under this wick, so this like is a strong resistance right here. Closed under this wick, didn't close above. And then following that, we get a strong bearish engulfing. And not only did it engulf this candle, but it engulfed this daily candle, and this daily candle. All of those 4 days it engulfed. So that's a telltale sign. You can't you know, pay that no mind type shit. When it's engulfing multiple days, like, that is power, that is strength, that is heavy volume, and that is a one-sided play from the bears. So if anything, as far as looking at how structure is playing out, I could see us pushing up into this area right here, especially how it's lining up with this area right here, and also lining up with this wick rejection area right here. So I could see market pushing up right about here, and I would like to see some reversals on the 1 hour to get into sales. If we push past that and close up here, then yeah, they trying to shake us out. But nonetheless, we should go with the flow based on 1 hour engulfings off of support and resistance. So I'm thinking that we're gonna feel more up in this range. I think I had this off in 1 hour, but yeah, we're gonna feel this range down here and more to this level down here. And ultimately, if we can take out these lows, we have levels down here too. And like I said, I think all this is on the 1 hour. This right here, this probably is up to 1 hour too. Let me see. No, that's daily. So yeah, this is the last area of the daily clean traffic fair value gap that we did not fill in yet. We tapped into it, which is a good entry for buys. And not to play. This could be, like I said, this is our new low, but this could be the low, and we could continue higher. But like I said, it would be nice to get more bearishness, which I'm thinking we're gonna get, maybe down to this area, and then look for buys to continue up. What we don't want lows to be taken out. If the lows taken out, then yeah, all this was just double topping, strong resistance just to continue down for more sales. Like I said, we can come into this area, take our liquidity right here, these equal lows, and then continue higher. But what we don't want is a close below here. But that scenario will play out throughout the week because this is the daily time frame. So being that we looking more on our bearish play, let's see on the 4 hour, and then we'll go down to the 1 hour. 4 hour, we do have an engulfing right here. So that goes in play with the engulfing we saw in that daily. It wasn't a color change engulfing, but still it was an engulfing. To mitigate those two bullish engulfing candles that didn't work out. So if I look at the daily, these two bullish engulfings, one right here, engulfing to the upside. Those didn't work out because they were followed by a bearish engulfing both of them holes. And these two little ones too. So all four of that shit got engulfed on the daily. Followed in the 4 hour engulfing bearish. So actually you could have got in on that looking at this 4 hour engulfing. And because we didn't get a 1 hour engulfing. So that 4 hour engulfing would have set you up for a nice sell on Friday. Well, Thursday afternoon, going into Friday. And go back to the 1 hour. Like I said, we didn't get no bearish engulfings on the 1 hour, but that 4 hour showed you. The 1 hour showed you something. You know, we filled the rest of this clean traffic, took out this relative equal highs over here. Liquidity was above there, took all that out, grabbed that, and reversed strong for sales. What we would like to see is shit. I ain't gonna say what we'd like to see. What we already saw was a bearish engulfing on the 1 hour, opening up on Sunday. And
yeah, I'm actually in a tester on that one. I really like that setup. I went ahead and took that one. Just a tester Sunday.
I'm glad you said that, bro, because I broke down the fact that this was a tester scenario from last week. Oh, yeah. Right here. How we got this engulfing on Sunday last week. But it was kind of iffy because it was engulfing Friday's price action. So this was last week Friday, and then you get Sunday engulfing that. So I was like, I kind of want the new week to play out and then an engulfing, like how this one posted. And it worked out way better. So I'm seeing the same scenario here. We get a Sunday engulfing, kind of engulfing some of the Friday price action. So I would rather let more price action work out and then give us another engulfing. But who knows? This could be what we was waiting for because, like I said, we coming off a strong daily engulfing, and that was created by a 4 hour engulfing. So all this is heavy pressure from the bulls. I mean, from the bears.
Yeah, I mean, it was a great, analysis, just going from the weekly on the way down, and it's pretty much been a bearish, bias. And just looking at the flow of things, yeah, we have been in a very in a nice range of consolidation. But overall, yeah, it has been bearish for some time now. So yeah, no, that was sweet. Like I said, I do agree with the continuation of the bear, especially when you shine light on the monthly and how this month is about to end. Looking at that monthly chart, that was an eye opener for me. So that looks really good. So,
and being that I'm thinking we more bearish than anything, I'm thinking this only wicked up to test that resistance, and then we're gonna form another bearish monthly candle, just like we've been doing for the past 2 months. So we got this engulfing monthly on March. I think this was March, and then April, and I think this is gonna be actually this is April. Okay, so yeah, February, March, April, and then going into May. So yeah, I'm bearish, bro. What about you?
The same. Yeah, I am bearish for the week.
Even though that bullish engulfing from last week kind of had us like, damn, nigga, we going. On the daily, when we saw that daily engulfing.
Yes.
Yeah.
Yes. Gave us some buys. Like I did, you know, take
Mhm.
some of them buys on
That was Tuesday. This right
that
here.
was, yeah.
This right, actually, what was it? Right here. That Monday night buy. That was the engulfing. The initial one. And you got
Yes.
that.
Yeah, that was a sleeper.
Yeah, you got that. And that was the engulfing. So if you look at the daily. Right here, Tuesday. Yep, right there. That was the color change engulfing.
Yep. I thought it was going to be a continuation. We
Yeah.
didn't get that Wednesday, but Thursday I came back around and got that same buy. And then Friday we saw what it did.
And I guess we got to kind of realize too going forward, when we get it engulfing like this, not at support, it's kind of at the mid range. You kind of got to look at it like, damn, will this have enough power to push through this strong of a resistance? That, like, you know, this is a strong resistance with the wick rejection here and 2 reversals right here. Like, that's strong resistance.
True.
Will this mid-level type of engulfing push through? Like, it didn't. It
Right.
fought all week. So
Which,
just different clues to add to the
yes.
rapport.
Yeah, and saying just like you said, that didn't happen at an area of support. So you pretty much caught in the middle of that consolidation. But that
Right.
is a true engulfing. So to keep an eye out for those major buys, like what I did for that not Wednesday but Thursday, especially with that news that comes out every Thursday, that has been bad, you know, since the beginning of this year, probably like the past 2-3 years, honestly. It's just been nothing but buys on that news release, which is the jobless claims continuous.
And that was right here. This buy action right here we saw.
Yes. Yeah.
Mhm. Yeah, that was sweet. That was sweet, sweet. Well, let's see what we got going as far as news for the week.
For sure. FXBros OTR.
Running it up. The daily. Let's see, economic calendar. Sign me out. Sign me back in. All right, we in there. Let's see. This week, no news on Sunday or Monday.
Oh my gosh.
No news on Sunday or Monday, but
What is going on Tuesday?
Tuesday we have a ripper. The RBA trimmed mean and weighted median. Yeah, nigga, on the CPI, they switching shit up, nigga.
Oh my gosh.
The
The
nigga said
quarter.
the weighted median CPI, then the trim mean CPI, then the CPI. Yeah, they playing. They be like, what other news can we come out with? How about the trimmed mean CPI for quarter on quarter?
Bro, that's I'm calling it right now. Tuesday night, that's going to be the tank that we are looking for it to drop down into those areas. I do believe so.
Tuesday night, you hear them, folks.
Consumer price index has been extremely. I mean, I have to look at. I'm not too, keen on Aussie as far as like the economics, which is crazy because I am trading it, so I'm learning. I need to get more into fundamentals, but that's why I I have my brother, so he's very in detail. And you could probably, if you don't mind, bro, like just kind of running these through just to see like as far as like the consistency and what we may be looking at on these news release. That this is a big, big, big Tuesday night that's going to happen.
That's and they all drop it on the same time.
It's crazy.
Like damn staggering that shit. But all right, so we got that on Tuesday. Wednesday, durable goods, good trade balance for the USD. That's 8:30 in the morning. Thursday, jobless claims. Continuing jobless claim. We got GDP growth rate. That's a nice little thing to look at. Friday, core PCE price index, month on month, personal income, personal spending, and Michigan consumer sentiment. Okay, as far as Tuesday, let's talk about the inflation rate. The previous is 7.8 of their inflation rate. The consensus they're expecting to cut rates or cut inflation.
Yep.
They're expecting inflation to be trimmed down to 6.9. A higher than expected figure should be positive. So that the last release was previous 7.3, consensus 7.5, and then actual was a 7.8. But they reading that as, see, it's weird because inflation on the economy level is bad. Like inflation on the economic level is bad, but it's good for your currency. You feel me? So a higher number, I guess, would seem bullish or great, even though it's bad for the economy.
True. So
So
that means that will, if they would lower the inflation rate.
no, I
that-
take it back. Interest rate.
I mean,
The interest rate is what make the currency good. Inflation overall is just for a price increase from goods to rent. So in a sense, I guess that could be looked at as a bullish move because if the prices are increasing, I guess.
but this, yeah, but that's if it was increasing. The consensus is 6.9, which is a super drop. So
Yes, which
coming
I
from
would
7,
think.
that's a
I would
positive.
think, me too, but they go mark that as a negative. I know that because if you, I don't know. Let me see. Are you looking at? Let me share this tab instead. Can you see what I'm looking at now? The Australian interest rate.
Perfect. Yes.
Okay. Yeah, right here they marked it as a positive number, even though it's increasing inflation, which is bad. So if they mark that as a positive, I'm not sure if the currency will go positive. And did this come out the same time?
I'm wondering. So it's positive because it's highlighted green.
Yeah, it was green. It was better. It was better. It was a higher number. So anything higher, it gonna say positive because that's what positive is, like more.
Okay, so here's the thing.
But in a sense, it's more for the percentage, but it's less for the impact it's having on the economy.
So it'll be more so to really focus on the consistency than the actual. Like, I mean, of course, the actual determines the
Right.
outcome, but the consistency is like looking at, okay, a 7.5. We all know, like, for these past couple of months, all around the world, inflation is going up. So to see a consistency of 7.5, you would either agree with that. You know what I'm saying? Like I would say, a lot of people be like, okay, yeah, I can see that. They're doing a lot of height rates, and we all see that a lot of people is doing like 50, half or a quarter
Right.
inflation. So my thing is the consistency now is less from what it is. See, right now we're looking at it and it's the previous and the consistency. The consistency is more than the previous. If we look at what's about to come out this Tuesday, the previous is high and the consistency is dropping down drastically
So
lower.
they're expecting it to drop. So that would mean they expecting the increase in interest rates to be having an effect on the economy to cause the inflation rate to come down, because that's how the Fed, the federal government, or whatever they central bank, that's how they get inflation rate to come down, by raising interest rates. You feel me?
Okay.
So if they start to see the inflation rate come down, then they'll start cutting rates.
Which would be positive for the Australian, and that would drop this pair.
No, it would go up. Remember, the
Right.
Australian dollar, the Australia is the quoted price. So when anything for Australia news is true on the chart. So if the Australian news is positive, the chart is gonna go positive up. If the Australian
Oh,
news is negative, the chart
okay.
should go down. If the USD news is positive, then the chart should go down. If the USD news is negative, then the chart should go up. It's the opposite for the secondary quoted pair in the
I
currency
see.
pair. Yeah,
Okay, I feel you.
yeah. So whatever the pair, whatever on the currency pair, the first pair, then yeah, their news is positive as far as the movement going up and down on the charts.
Right.
The second pair would be inverted, flipped around. So we back on the charts.
Yeah, we live.
All right, bet. Yeah, man. I'm done with all that shit. I got that shit done.
Look like that sell signal, the Sunday sell signal is kind of working out.
Yeah,
Now the thing is, this is a sell
and
the
it's coming.
beginning of the week, and it's at the bottom of a strong
Look at that
weekly support.
Look at the support right here.
Count them out, man. Like,
Come on, man. This was from last week. We
jeez.
got 1, 2, Wednesday, Thursday, coming into the next following week, Monday. I could count this one as one Wednesday, then Friday it settled off. So yeah, this is pretty strong. I ain't gonna lie. And I would think it was gonna pierce through kinda if we didn't break above these highs. If we kind of kept with the bearishness and kind of broke through, I can see that. But the fact that we pushed up here to take out this liquidity, I'm not sure. I mean, that could be enough of an entry of the pair to break this support, but let me see how it look on a 4 hour. So that 4 hour didn't go. 4 hour didn't go. It's just targets. Yeah, the next target would be here, this area, obviously, because that's the next little gap to fill on the 1 hour right here. So if we break this strong support, that could be a next target for you, right up in this little curve, this gap right at the top, that line 66, 66, up in that area, 67. That would be a nice target. Or if it continues lower, right up in here, I like how this is kind of holding, so I will put another target right here, right at these lows, kind of with all this consolidation. That'll be a nice little target. And if it keep going lower, then we got the low down here. Nothing really to fill, no true gaps. Man, this is one right here. But that would coincide with that. So yeah, we still gotta wait until this breaks before we start looking for all these areas. But we still got more targets to the downside, obviously. And then if I look at here, Up down here. And this purple, I think that was like the 4 hour. I think so. Yeah, I think that was about the 4 Really? Okay, that's the daily. Let me write that shit.
So you're getting a little savvy on that TradingView, bro.
Man, that's all I use, dog.
No, man, I need to start using it, bro.
I just like it, man. It's very simple. You know, like I said, I can write all on this, and
yeah, come back and log in. It'll be the
it
same thing.
saves. It
Yes.
saves on every chart. Like, so if I
Yes.
pull up another Australian dollar from like how Oanda is showing us if I pull up one from like FX.com, I want to say these parameters will show up on it. I think so. I could be wrong, but still in all, it saves on there. So I can log off and all that shit. It's looking good, man. It's looking good. I ain't gonna lie to you.
I thought I had TradingView downloaded. It must have been on my other laptop. But I need to start doing that.
I'll be using the website.
Yeah, I mean when I'm at work, that's what I use when I'm at work and just log in just to take a peek at it. But
On your
if I'm
laptop,
at the crib, yeah, man. Let's see.
Oh, damn, we've been in here for an hour already. What time be flying?
When you live in life,
Nah, for real. I think when I was breaking down them charts,
come on, man.
I was flying, boy.
Yeah, I had a few questions, man. I was gonna ask you like, what are three things that that new traders should learn in order to be somewhat, I would say, consistent, successful in today's market.
You asking me what are 3 things traders should learn?
New traders, yes.
New traders?
Yes.
Number 1. You said what they should learn. Like new traders.
Okay, I'm gonna tweak it. What are
Or what they should be focused on mostly? Like
yes, yeah, I would say more psychologically.
just in general, I'll generalize it. As a new trader, what you should be focused like the top 3 things
Yes.
I would say is spend time watching the charts. Get familiar with just looking at the charts. Don't worry about trying to trade or get in the trade. Just look at the heartbeat. Like, just see how it moves throughout a time. Like, and I would designate, like, you go off this shit, because every major trader is gonna tell you this. Like, it's only volume at certain parts of the day. So if you not up in the morning, you're not a morning type person, but you do have time in the evening, catch that evening, maybe stay up late if you can until London. If not, at least catch that late evening volatility. It's not as much as the morning, but it's good enough for you to spend time watching the charts. I feel like that's more important, like off the rip. And that kind of goes into demo trade before you put real money. I know that I didn't do that. A lot of people don't do that. But looking back now after 4 years, yeah, if I would have demo traded at least for the first year, or at least for sure 6 months, but demo trade for the first year, you go save yourself so much headache. Like, you may think that you're not making no progress because you got a whole year of you not making no money because you just demonstrate. But I swear, the the understanding you go get with how the markets move in different seasons and different uh quarters of the year, all that type of shit, the knowledge you'll learn, it will be like priceless, bro. Nobody, you can't put a price on that. That's one. Looking at that. Number two, I will focus on finding a strategy that you can utilize that goes with your personality. um a lot of people come into this, wanting to get quick money, fast money. So of course, nobody is trading the daily, weekly, or monthly charts at all. Like, nobody. Everybody is geared to the 1 hour, if that, and 30, 15, 5, 1 minute, sometimes to the second. So if you are not that much of a patient person, then you might want to look into scalping. But scalping got a lot more strenuous rules, so that's something you gotta, investigate and research on your own. But
Yes, that definitely have to have a higher. It takes more skill to scale.
yeah, take more skill, and like with our setups, we can put 10 pip stop losses, and we can look for 30 pip runs, 40 pip runs. On a scalper's mindset, you should never be looking for it. Now, not to say you can't get it, but you should never be looking for a trade over 10 pips. Really, you want to be getting 5 and get out. 5, get out, like a little quick jab. Like think of it like a boxing match. Like, quick jabs, get out. Quick jab, get out. Like, none of that stand. I'm gonna get the whole move. I'm trying to get 20. Nah, scratch all that shit, because the scalpers, you get so many opportunities to enter a trade. You don't want to be with that long holding for the full move type of mindset when you scalping. Only people that can swing and day trade, like longer term traders can do that. So finding something that is good with your personality, that's the second thing. Whether it's scalping for people that want to be in and out, or if you're more of a patient person, you can wait, you can chill, you can sit on your hands and learn this shit, then swing trading is for you. And it's better. I mean, it's way more relaxing and shit. And the third thing, I would say, for a trader to do, and this is probably the most craziest thing, I would say read more books about Forex trading and stay the hell off of YouTube. And I know that's hard because we're on YouTube right now. But if I was to tell a new trader, like, first off, yeah, stay off of YouTube. Don't come on YouTube learning all these new strategies and all, because the simple strategies that niggas wrote in books 10, 20, 30 years ago, they still work. I mean, and it's not even a strategy. You could just take breakout trades. That's strategy. Support and resistance, bouncing off, or like simple shit, all that shit, old shit. That was talked about 20, 30 years ago. So that's why I say, if you just focus on certain books, like the book that I had, I forgot the name of it. I know Marcel Link, I think, was the author or the publisher. I forgot the name of that. But I mean, Trading in the Zone. You know, them type of books, old books. Read books, stay off of YouTube. Don't come on YouTube unless you have some kind of 6 year to a year type of understanding of the markets. I know that sounds crazy because everybody on YouTube, nigga, they got Lamborghinis, Rolex watches, they making buku money on YouTube, but that's all cap. Stay off of YouTube, and that's my top 3.
High probability trading.
High probability trading. That book is a Bible. That book and anything Mark Douglas wrote is a Bible too for traders. You get them books, read them.
Yeah, trading in the zone is amazing.
Nah, for real, crazy. It's gonna change your life. Mentally, it's gonna change your life. Like, and when you do get trading in the zone, don't look in that book for no strategies. Don't go in there with that mindset. Look for discipline, structure, psychology. That's what you want to get from that book, not a strategy. It's the discipline and the psychology and all that shit. You go to that other book we mentioned. That's the strategy book.
Yeah, I mean, pretty much those
high probability trading. Yeah, that's a strategy book.
Like, you know, he just generalized it, and all 3 of those points had nothing to do about a strategy.
Nah, thanks. I mean, yes. My second point was, you know, if you do find a strategy, find something that mends with your personality. But it's so many strategies. I don't want you to. I wouldn't want a trader to waste too much time on that shit. You know.
They all work. It doesn't take much. It doesn't take much to win a trade.
And then on the cool, don't worry about a strategy. Worry about just reading the price action and highs and lows and highs and support and resistance. Learn that shit first, because that's what's make that information. That's how you make a strategy. So if you don't know that, don't even worry about going to get a strategy, because the strategy, you ain't gonna know the different terms and the tools that the strategy was created off of.
That's facts. Yeah, that's true.
Yeah. You know, just like how you pointed out to me, like we get heavy volatility at 9 a.m. for NYSE. Like, I wouldn't have even kind of thought about that, but the fact that you brought that up, you know, that's the type of stuff you were gonna get over time as you grow. That's why I said I would highly recommend, looking back at what I know now, to do a demo. I would say do a demo for like 6 months to a year, because the confidence you go gain from running that demo, and on the back end just stacking up some bread, like stack up like 5 to 10,000 or something, and then once you get your confidence up with that demo, I bet I will put money on that trader probably not gonna experience a lot of, if or any, drawdown. Well, I ain't gonna say not any, but not a lot of drawdown to where they like got weeks of losing money, versus the trader that just start off the rip, throw $50, $100, $200 in that bitch, and as they are figuring it out, they're trading, because they on YouTube, and this nigga say he got a fire trade, 80% win rate. This nigga say he got a fire trade strategy. He scalp. He doing this. He doing ICT. He doing all that. There's so many strategies out there, bro. You will be going through it. I myself, I can't count on my hand, but all the time I'm just gonna say at least about 20. I done been through 20 strategies that I done tested since I started Forex. And that's I know that's true. Until I got to the color changing golfing, yeah, I done been through about 20 of them holes.
And then all 20 of those probably had 5 small mini tweaks within them.
Right.
So yeah, you're talking easily over 100.
Man, come on, bro. That just exactly. Once you start tweaking strategies and changing parameters, like, yeah, that's a new strategy. So yeah, that shit can go crazy, bro.
That was well said, bro. Not really. I appreciated that, and that was valuable information. So, you know, for the audience, I hope it all jotted some of that stuff down and just realized that you are in control of your account. You know, like it's talking about your personality has a lot to do with the success of you trading. Not how much money you have. You know what I'm saying? It's just like your style of trading has to match up with your lifestyle, if that means anything, and it has to grow with it. You can't do well in trading and your life is declining. It doesn't balance. So as you increase in, you know, in health, 9 times out of 10, wealth would just be along with it. And I don't mean wealth of the pocket, but of the mind. Shout out to NERD, man.
Right, come on. Well said, bro. Like, a lot of people get caught up into the money of all this, and granted, you can make a crazy amount of money with this, but nobody still to this day, and bro, trust me, I am a research god. I will be on YouTube for 6 hours plus playing videos of somebody regurgitating the same thing just to see if they said something different than the other person. Like, on the cool, that's how I found the ICT dude, and I gravitated toward him because I did so much research, and from my years of experience, I knew he was talking about, because what he said I saw too, you know, type shit, versus just somebody pulling something out their ass. And you know, overall, like, you'll get caught up, you know, scouring through all that information, but at the end of the day, it is beneficial. But I'm gonna tell you, throughout all my research, there has nobody been successful and continuous success from only trading, where they started a small amount and ran it up quick as hell. And when I say quick as hell, I'm talking about all these people that's running up $100 accounts to 50,000 in 3 months. Like, come on, bro.
What is small amount?
100 to 500 to 50,000 in 3 months.
Yeah, okay, I see.
And it hurts to say this, because mathematically, yes, you can do that. Yes, it is mathematically possible to turn 500 into 50,000 in 3 months. Hell, it's possible to do it in 1 month. But to be able to do that, you would literally have to be profitable in damn near every single trade you take. And that is not a factor for it.
Profitable and full margin every fucking trade.
Yeah, all that, bro. You got to go full margin, and you can't lose. And that hasn't been done, because if it had been done, I ain't gonna say, but yeah, it ain't been done yet. So don't try to chase that model.
Which, to go back to what you said about stay off of YouTube, to just broaden that statement, stay off of social media, stay off your phone, stay out of other people's reality.
Man,
we are so tapped into other people's mind now, like, it's really freaking crazy. Like, you can't, people are not thinking for themselves.
Yeah, you're not even putting like context clues together to come up with an observation, because when you run to social media to get that fix
of news, you already got suggestions opposed upon you by scrolling. You scrolling and
Yes.
people are already telling you shit and showing you shit. So you have no time to think because you're getting just information.
But what you thinking like, no, I'm just checking out my checking the feed and
That's what
stuff
you
like
think,
that. When really subconsciously, yes,
Yeah.
you are getting a super hit of in the form of dopamine. So it feels good. That's why you do it. So
Right.
but you're getting, like you said, all this input. So now before your day even started, you have these things that just wasn't in your head at all, or it was in your head, especially if you was looking at your phone right before you went to sleep and want to know why this person was in your dream that you never seen in 10, 20 years, but you just happen to see that you was on their page or something like that.
Man,
This type of stuff has happened. So
that's the subject.
yeah, man.
Yeah, you're right.
Yes. Now, and I'm saying like, unplug from everything, because yes, everybody is somewhat addicted to that device. Yes, it's a tool. So it's a lot of things that we can now do. And it benefits, society in a way, but it also can harm communication, which is just super important. People just don't know how to talk to each other. They don't want to, because it's super weird. Like, what I'm saying, they literally got a term slide into your DMs, like you gotta sneak into, like, why you gotta sneak a message? Like, what I'm saying? So just imagine they see you on the street, they ain't gonna say shit, they probably gonna run away. But yeah, man, just to go back to it, just like, yeah, stay off of that, stick to whatever you want to do, find what gives you dopamine naturally, whether if it's painting or drawing or I always think of something artistic because that's what I do. But whatever it may be, tap into it. And if it's trading, focus on that. Don't worry about what other people doing or what they have and stuff like that. They have that because it's theirs, not yours. So for you to even think that you can get that, that's stupid, because that's theirs.
Yeah.
Like, can't live somebody else's life because that's their life. Like, live your life. Thrive for what you want to do, what you want to be, and yeah, man, cut people off. Not in a bad way. You just doing you. You take care of yourself.
Facts. There's a time and place for all that shit.
Yes.
Like,
when that plane is going down, they say put the mask on you first. Save yourself.
Take care of yourself first before you care of everybody else.
Yes. And it's all, and it's all love, and it's not like anything selfish. That's just is what it is. You cannot take care of anybody if you not taking care of yourself, and that's like emotionally, mentally, physically, all that stuff. So yeah, do that, and those other two vital points, and the rest will follow. The rest will follow. Patience will follow. Consistency will follow. And success will be, all in the play after. But
yep, that's the end goal. And it's the key word to all that shit is sacrifice, man. You gotta be willing to sacrifice.
yeah, you are like, yes,
people, like, all that shit is a sacrifice. That's how you get ahead. That's how you even able to help other people. You gotta sacrifice the time you willing to spend with those people, because you can't help them now. You're not in a position to help, so you gotta sacrifice all that shit just so you can help them. Type shit. Like, look at just like that. The damn plane analogy with the mask. Like, think about it. If everybody in the room is doused in gasoline, everybody got gasoline on, and then you the first one to catch on fire. What you would want to do is probably try to save everybody, like, hey, y'all, get out, because I'm on fire. But nah, you need to sacrifice yourself, put yourself out, before you can try to help everybody else. Because as soon as you try to go help people and try to get everybody out, you go fuck around, touch somebody, then they go catch on fire. Now you got 2 people on fire. Man, come on. You see where it could get out of hand at.
Reaction.
Save yourself first.
Yeah.
Save yourself first. Get yourself together, and then you can help everybody else. Sacrifice.
That's it, man.
Big sacrifice, man. But yeah, not a lot of movement on Sunday. The sales are still working out. Look like we rejecting still off of this support down here. Overall, we need to see a breakout like this right here. I'll put that.
Yeah, definitely see what the 4 hour might do. Well, we'll wake up in the morning and see what happens. But yeah, I'd like to see something happen in the 4 hour. Get a nice close.
Bam. We want to see a breakout of that consolidation right there.
Yep.
So if it goes all the way up, don't get all excited like, oh, we're going up now. We need to break out of here and a retest and then a continuation. And the same thing for our hills. We need to break out, retest, then a continuation. So that's where we at. We'll revisit this in the morning, my boy. And see how we're looking. Yeah, man. Appreciate y'all for tapping in. We'll be back next Sunday, but also y'all want to tap in the morning. Y'all get on the Telegram. We drop a link in there every morning, 6:30.
6:30.
Tap in with us, man. We're gonna be going over these the highly volatile time zone in the morning, London and New York crossover. So and see y'all in the morning. And we out, man.
Peace.
Peace out, bro.